It's not obviously some divine intervention is there, but unless you are trying with the right intent, clarity of purpose, and executing well, right? Even the divine intervention will not happen. Right? There is a joke कि एक भिखारी था, वो भगवान से कुछ मांग रहा था कि मेरी लॉटरी निकाल दो. So somebody comes and says पहले लॉटरी का टिकट तो खरीदो, तभी तो लॉटरी निकलेगी, right? So the first thing is that you have to take first step in what you want. You want to become rich, you want to buy a lottery, you want to do, and you are consciously executing on that plan. You know, God will help you. It's like that. It's not it's as much as God, as much as your brain, because your brain is really thinking about what you want to do, and then you see, brain is like a scanner. You know, it's scanning the environment constantly, and then filtering the stuff that it wants to filter, and it's presenting in front of you. So what you are thinking, the brain will think about that, and then it'll bring and present in front of you, and then you'll see, okay, there are so many opportunities which I was not even clear. Getting it? I hope you are getting what I am saying. Right? So another thing is human tendency is to jump at first opportunity. This is again, what happens is, you get something, you are typically everybody is in a comfort zone. So, you get, something that comes your way, you think, अच्छा ठीक है चलो मैं ये कर लेता हूँ, without realizing कि उसके consequences क्या होंगे. And once you start walking any path, it's very, very difficult to make course correction. And also what happens is that once you are into it, then in any case you don't know what else is there. What is that you're missing? Right? So that's why all the more reason that you start thinking about all these things today, because when you're when you're starting your job, then at least you make effort to pick up the right kind of job. If you don't make that effort today, you pick up any job that comes your way, then you don't know what else you left out, right? So whether you want to work for a corporate, whether you want to work for a startup, all of that is a decision that you need to take well before you start appearing for your interviews. And see, there is no harm in whatever you think you are. Every person is very unique. So some like hustling. Hustling is again a new buzzword in the startup circle. Where you're constantly working, constantly doing something. But not everybody may be like that. Your DNA, your temperament may be completely different. So you may like a cool, comfortable job, which is fine, absolutely fine. So that's where if you're working for a corporate, you're working for any company, or you're not working for a startup, that is absolutely fine. Or vice versa. You're working for a startup, your parents may not approve of it. They may want to work with your big brand. But if you yourself think that you are cut out for a startup, you want to do a startup, sometime in your life, then you have to have the startup experience and then go and work for a startup. All my life, my mother never understood which company I worked for. So her biggest complaint was that if somebody asked, she is unable to answer. She was unable to answer which company, right? So that's fine. I just kept telling her, it's okay. Tell them that he's doing something worthwhile. It's okay. So you have to live with that, but ultimately it's your decision, and you will not regret what you've done in your life. She wanted also me to go abroad, but I never thought I'll be fit for that kind of setup, or I like to do something in India for India, right? So that was very clear in my mind, and ultimately when we did Nivesh, we are trying to help the masses manage their wealth better. So that was the goal. Probably when I started out, I was not very clear what I'll do, how it will happen, but ultimately probably God pushed me into that, and we started Nivesh, where we think we are trying to help economy overall, because if the investments can move into the capital markets, the Indian economy itself can transform in a big way. For example, I will give you some data. About 150 lakh crore of bank deposits are there in India. Against that, mutual fund assets are only 15 lakh crore. So imagine how much of money. I am talking about bank deposits. Then there is huge wealth which is lying in the form of gold or cash or physical assets which are not being utilized for economic development. Okay? So if this money can move into the economy, into the productive development, the country can transform. So whatever we are doing at Nivesh, we believe we are kind of helping the transformation of economy. One more data point I'll give you, that markets have declined in last 1 year, right? And you would have read the data point that FIs have been big seller. FIs have sold huge amount of stocks in last 1 year. In spite of that, the market correction was only 20%. Any idea why?
Because the introduction of the retailers is very
Exactly.
large.
So retail, there is a lot of retail money coming in, and retail investor money was coming a lot through mutual fund route also, right? So bit of contribution of Nivesh also in that. So you can see how things are correlated, right? Which you don't realize today, you will realize later on in the life. The lines are a little faded, but I hope you can see this chart. So the decision that you take today, the impact in the long run is huge, significant. In the short run, you will not realize the difference, but the gap will keep increasing as the time passes by. Right? So it's like the angle that is created, So, whether it will go like this or whether it will go like this, that depends on the decision that you take today. So today you may want to take a easy way out, take an easy decision, but it will cost you big time in the long run. And that is the biggest mistake youth make today. It's the prime of the youth, we tend to take easy decisions and thinking that okay, ठीक है, चल जाएगा. But later on we'll realize that somebody who had taken a harder decision is doing much better than what you are doing. So if you take a great decision, you will rise much faster in life versus somebody who's not taken a great decision. So what I mean to say is spend a lot of time in a decision which has a crucial impact in your life. Right? And there are those crucial decisions will happen now as you are getting out, becoming an adult, and you'll start your career. So some of these crucial decisions will happen now. And that's where, again, the whole thing of understanding who you are, defining your goal, what you want to do, taking the right decision, all of that becomes very important. So, some of you are in finance, you would have read about compounding. Right? We read it as a concept in finance. We don't really understand the impact of it, which is very powerful concept in investing, but otherwise also in life. It works everywhere, not only in investment, but everywhere in life the compounding works, where the results are visible after you spend certain time in something. Results are never visible immediately, and if something is visible immediately, it will not sustain. So the example of investing I have taken here, that if you invest 10,000 rupees every month in SIP, systematic investment plan or mutual funds, in first 10 years, your money will be just 23 lakhs. And then 10 to 15 years, 23 lakh will become 50 lakh. Then 15 to 20 will become 100 lakhs. And then 20 to 30 will become 3.5 crore. What happens in most cases? You can understand, right? Most people withdraw their money 6th year, 7th year, 8th year. When the compounding is just about to kick in, they'll withdraw. That happens in jobs also. You work with a company for 5 years, बहुत हो गया 5 साल मैं कुछ नया ढूंढता हूँ, and that's where probably you will get promoted, you will do bigger things because company is likely to reward you now for all the hard work that you put in for 5 years. So I have seen the best careers people had when they stuck with a company for very long, and company grew along with it. Somebody who joined Bharti very early on, they ended up becoming CEO of one of their divisions in 15 years because company grew, they were with the company throughout, so they obviously grew with the company. And company rewarded all the hard work, they understood what company is doing. So obviously they do extremely well. And then the reward can be disproportionate to what they would get otherwise. So this, इसको कहते हैं गांठ बांध के अपने पास रख लो, ये वैसा concept है. So even if you work, if you save this money, you can retire much earlier. Then think कि अच्छा किसी दिन मेरे पास कोई लॉटरी निकलेगी और मैं 2 करोड़ इकट्ठे बना लूँगा. वो होने वाला नहीं है. 99.9% केसेस में नहीं होता है कि मैं स्टॉक में कमा लूँगा या मैं वैसे कमा लूँगा या ऐसे कमा लूँगा. It is this discipline that works. Nothing else works. And 20 years later you will think कि अच्छा मैंने तब शुरू किया तो ये हो जाता. तो वो मैं आज बता रहा हूँ कि आज शुरू करोगे तो ये हो जाएगा. Again, these may sound very boring and bookish, but huge value of integrity, ethics, and discipline. Why? Because another thing that you'll see that you operate within a very limited circle, and there are some theories also that you have only 200, 300 people that you will deal with in your entire life, and you will keep meeting those people again and again. I have seen it in my life; it happens. So unless they have a good opinion about you, right, they'll not do business with you. And you may need to do business with people at some point of time, and particularly if you want to start at your own. Today in Nivesh, there are many investors where I worked with them in my previous organization, right? So that is because for investing in a startup, the most important thing is whether the founder, there is integrity, can you trust the person? So VCs invest on a person, not on the idea or company, when they invest early on. Why? Because idea, again I said, everybody has idea, everybody can copy that idea, everybody can try to do things. But unless you do with the right intent and there is integrity, then no, it will not work. Again, you must be reading a lot of stories about some problem, some or other problem in some startups, which is where the integrity was missing. So if integrity is missing, the company will fail, and ultimately the VC money also is lost. So as far as possible, they try to make sure that the person that anybody is doing business with, personally also, right? If you know that this guy is fraud, would you like to do business with him? No, right? So then you have to create your own perception also like that I am not a fraud. I am a person that you can trust. And whether it's a startup, whether you work for a corporate, wherever you are, that confidence is very important that this is a guy I can trust. So उससे क्या होगा कि you not realize, but later on when you need people, you need to do work with somebody, they'll be open to working with you because they know your character, they know who you are. And then similarly the value of time. That's one asset which is available to all of you equally. You have equal amount of time. How you use that time is up to you, entirely up to you. Again, as a youth, we end up wasting a lot of our time because we don't have responsibilities. We don't have to worry about family. You are kind of free, right? You have today parents are generally well off, so they give you a decent amount of money also to spend. They'll not say no to whatever you want to do. But thing is that if you invest that time in building yourself, in increasing your skills, changing your personality, then you are making that investment in yourself, which will give you rewards later on. So typically, what happens is that in 20s you don't utilize your time well, then 30s you get married, you have family, and then 40s you realize that you are running short of your goals. Then you start slogging in 40s and 50s. So you'll not have to slog in 40s and 50s if you slog now. So it's your choice whether you want to slog now or you want to slog in 40s and 50s. So if you in the youth you have a lot of energy, you have a lot of stamina, you are invested in your health, and this is the right time to use the time properly and create something for yourself, so that you can at 40s and 50s you can relax and use the money and time in a much better way. So future में क्या होने वाला है हमको नहीं मालूम. What will happen 5 years down the road, we don't know. But if you assimilate all the information and you think about it, you will be able to figure out something. This is what it can happen. And then that will become very important data point in as you decide your career and as you decide your future. Because what is going to happen in future is very important determinant in your success, because if you build your career around it. Right? So for example, electrical vehicles we think will happen. So if you are still going to pursue a career in traditional auto industry, you will not do well. Right? So whatever field you are, and understanding what can happen 5 years, 10 years down the road, and then building your career around it can give you great benefits. Because you will be working in an industry, sunrise industry, where there will be a lot of demand for talent, but at the same time, a lot of scarcity of the talent. Because not many people thought about it, not many people tried to build their career. So digital marketing is one example. Today, getting a very good resource in digital marketing is absolutely impossible. Because digital marketing has a history of maybe 7-8 years. So somebody who started 7-8 years back, today there is so much in demand that they can command any kind of package. So, but they had that kind of vision that they could see that this is the future. So they started building a career around digital marketing. And similarly, other newer technologies like artificial intelligence or machine learning or anything like that. So it's again, you have to go out of your comfort zone and adopt something new, but the rewards can be disproportionate. So risk reward, again, you would have read, right? You read about it. So if you take a little bit of risk, the rewards can be disproportionate, but the risk has to be calculated, understood, researched, and then you decide to do something, then rewards will automatically follow. Skill versus attitude. This I keep saying in my organization also. Attitude is the most important. You may be a great, person who is conversant with a particular technology, particular skill, but if you don't have the right attitude, you are of no use. Anywhere, any organization, whatever you do, will not succeed. Because as you can see, this image also I have picked up from internet. 85%, so knowledge base is same, right? For 2%, knowledge can be the same, but the attitude will make the difference in where they are. Because 85% of the success is attitude, only 15% is skill. Why, again, going back to, can I trust you? Can I depend on you? Right? If a task is assigned, can I be sure that this task will get over within the time frame? Or if it's not getting over, you'll come back proactively and say, this is a problem. This is all part of the attitude, nothing to do with your skill set. You may be a great programmer, you can write a very good quality of code, but if you don't deliver on time, it's of no use. So delivering on time is part of the attitude. Making sure that you follow all the good practices is part of the attitude. Right? What is your attitude? So understanding importance of attitude, it again determines your success anywhere, what you're trying to do. And finally, see, all of this is why we are doing, right? Anything that we do, why we do. We live in a capitalist society, so everything that we are doing is to earn money. You come to an MBA school to get a job, which is to earn your livelihood. So money matters, but you have to be very cautious about what kind of money you are talking about and how do you manage it. So there is a difference between greed, wealth creation, and managing your money well. Right? So greed is a problem, obviously, because if you do anything for greed, then you will try to take shortcuts, you will try to do things which may not be good. But if you earn money well and you manage it well, then it will give you a different kind of satisfaction. And money is a great enabler. You can do a lot of things if you have a decent amount of money in hand. For example, you want to pursue a hobby, right? So if you created enough wealth, then you can take a break and pursue your hobby. You want to go on a vacation, long vacation, you want to go around the world, you can do that. But only if you have saved enough that you're not worried about a job in hand, you're not worried about a regular income. But how does that happen? I've already told you a lot of secrets for that, right? Like compounding. So if you save consistently, you invest that money well, you will get to a decent amount of wealth, in a shorter span of time, and you would have ensured that you created that wealth. And once the wealth is there, then you're free to do anything. So don't think that money is bad. Many times, we get that notion that if I talk about money, it's not good, and this is again society creates that perception in our mind that talking about money is not good. But See, ultimately this country is run by taxes people pay, right? And who can pay taxes? Only people who make money, they pay taxes. So ultimately the entire country is running on people who are paying taxes. The, the poor, they get all the subsidy from the government because there are taxes at the, collected by the government. So if they don't collect those taxes, who will help the poor also? So think like that. That's a different mindset to think about money. And that mindset will take you in a positive direction. Because then you know that you are earning money, but ultimately it will be good for the society, it will be good for your parents, it will be good for your family, whatever. So it's not greed. You earn your money in a rightful manner, you manage it well, and then you will put it to good use. Right? So if that's the kind of mental framework you have, then it's not greed. It's earning money in the right manner, and then with a positive attitude where it will take you to the culmination of what you are trying to do. Right? So this is what I wanted to cover. I am happy to answer any question.
Thank you, sir. Thank you, sir, for such an insightful and inspiring address. Sir is open.
Sorry?
सर कौन सा सेक्टर 3 to 4 years में सर आप एक्सपेक्ट करते हैं ये बिलीव करते हैं कि हमें मल्टीप्लायर क्रिएट कर सकते हैं
अगर इन्वेस्ट करना है इसमें ये जॉब के लिए See, any company which is linked to economic development, which will benefit from the economic development, will grow. Because India as a country will grow definitely for next 5 to 10 years. So there's a lot of growth that will happen in India for many factors. And if India is growing, any company which is dependent on growth of India, which will benefit from the growth of India, will benefit. Right? So for example, I can take example of consumer durable or hotels, airlines. So these are the traditional sectors. Other way of looking at it is what is the sunrise industry, right? Like I said in my talk that what will happen in next 5 to 10 years. If you can visualize the future, then you can think about which companies can grow in those sunrise industries. So there the growth can be disproportionate. So the multi-bagger that you're talking about can come in those sunrise sectors, which can be, for example, an electric vehicle. So of late Tata Motors and Mahindra & Mahindra, why they are doing well? Because both of them taken a lot of initiatives in building electric vehicles. So think about that. See, there will not be any ready answer to this kind of question. You have to do your research, think about it, and then do research in terms of what companies are operating in that sector, or what companies are planning. Another thing that to look at when you're looking at investing is which companies have spent considerable time in building something. So the compounding is kicking. Right? For Apple had $1 billion market cap for a very, very long period of time. And then when it started moving up, when they started introducing all the products, the stock price just shot through the roof. So again, that thing that the company has spent considerable time in building some product portfolio, which can now start doing well. So if you think around those aspects, you'll be able to figure out answers to your question.
सर निवेश क्या गवर्नमेंट बॉन्ड्स में इन्वेस्ट करने का हेल्प करता है
Yeah. So Nivesh, the philosophy is that we have 3 product portfolios: mutual funds, fixed income, and insurance. Why 3 product portfolios? Because we think that for a wealth management, all 3 are important. Right? There's a lot of equity. We talk a lot about equity, but see, you can't have 100% of your money in equity, right? Because equity is volatile and will keep going up and down. So you need a stable portfolio where fixed income comes in. So when I say fixed income means your bonds, FDs, NCDs. Because there you are sure that you will get return at a particular rate, but fixed income can be very tricky. Why? Fixed income may look safe, but your money can be wiped out 100%. You had like Yes Bank fiasco some time back. You had Diwan housing case. So if somebody lost money in that particular bond, then 100% of money is gone. And equity, whenever if there is a correction, at least it will come back. You have hope that it will come back. Right? Bond will never happen. So that's why we decided to include bonds, because Indian mindset is typically fixed income oriented. That's why there is so much of money in bank deposits. So if we can give them better yield compared to what they are getting at bank, we can help them manage their wealth better. And insurance, because insurance is important from a wealth protection perspective. Any calamity can lead to destruction of wealth. And we have seen it in COVID, right? If your earning member dies, the entire wealth of the family can be at stake. So if insurance is planned well, these kind of calamities can be taken care. So for wealth management, a combination of three is very important. Like mutual fund or equity for growing your wealth, fixed income for providing stability to your portfolio, and insurance for protecting whatever money you have accumulated, whatever wealth you have created. So our idea is to provide a holistic solution that takes care of all the three aspects of personal wealth of an individual.
Sir, in India we know that it runs on a parallel economy. Most of the money is hoard which is black, and most of the businesses hoard the money. So how to convince business people to invest their wealth in such financial instruments and explain them that first they have to deduct the 30% tax on it, then you invest on us, and shift from the real estate traditional market in which they currently pour in the money.
Is you talking about investor or companies?
Sir, I am talking about that I have to convince somebody to invest in mutual funds or something like that. So how do I explain them? What the benefits I can tell them?
See, the benefit is simple, that the return that they'll get even after tax will be much higher. So there are data points. So you have to look at the data point, go to them with data, and then you will be able to convince them better. See, for example, if there is a parallel economy, there are very limited ways of putting that money. Today it's only real estate. You can't put money anywhere else apart from real estate if you are dealing in cash, right? But if you have money in your bank account, you can invest in a lot of avenues. And if you look at the returns over the last 10-15 years, real estate return is much lower than equity returns overall. And there are a lot of advantages of equity kind of investment. You can liquidate only part of it. There are tax benefits. You can manage it well. Real estate can be a big headache. Again, real estate, if you buy in an area where the demand is not there, again you may be completely stuck. So if you go to the person with all this kind of data with your research, then he'll get convinced. But if you're just telling him, "Acha, invest karo, kyun karega?" Right? So you have to convince him with some logical data point, and then the logical mind, when it comes in play, they'll agree to what you're saying.
Because the problem is the people say that first 30% of the income tax we have to pay on it, and then on the remaining 70% that we'll invest, we'll be able to make such kind of returns which can be expected from the real estate.
So do a calculation. So you invest 70% at 12% per annum, and you invest 100% at 7-8% per annum. In 5 years, you can do the calculation and see where the money is. Right? So that happens. So it's a very real life example. When you sell your real estate, there is a capital gain. There are capital gain bonds that people put money in, and we keep telling them that it's not a good idea, because if you put money in capital gain bonds, the interest rate is very low, and money is stuck for 5 years. So you're better off paying tax and investing it in equity kind of product. But again, the human mindset is such that they like safety of a bond or low yielding bond. Like bank deposit is a classic example. So much of money lying in bank deposit. In fact, this bank deposit itself is a big opportunity for all of you to think of career in financial services. Right? That tells you how the financial services will explode over the next 10 years. So today we are at the tip of the iceberg as far as financial services is concerned, because only the top segment of the population, if you look at the population pyramid, only the top tier of the population have invested in financial products, and that too only part of their wealth. If I have 1 crore, I would have put in maybe 10 lakh in mutual funds. 90 lakh is still in bank deposit. Right? So as this money comes into financial products, the overall financial services will boom. So from a career perspective, those who are in finance, be very confident of your future. Just that you have to understand the technology will play a very important role. So when you decide to work for a company, look at their technology quotient, look at their digital quotient, how much deep they are into technology, and how much they are putting in, investing in building technology. Because whosoever does not invest in technology will ultimately get redundant. And if you look at history, there are a lot of examples of that. Large companies, large brands have died if they are not kept with pace with the change. Right? So Kodak cameras is again one example that you keep reading. So it was a, when we were young, it was a company that we thought is a large company and doing great, but ultimately died very quickly. And death today of a company in this market is very fast. Companies can die in 4 or 5 years, even if they were very strong. So that answers your question also in terms of investing, right? When you are investing, try to understand, what steps the company is taking to make sure that they remain relevant in the future. That is unfolding next 4 or 5 years, whatever happens. The company has to remain relevant. And you as a career also have to remain relevant. So that's where you have to, develop yourself along the line of what the future holds, where the future is going.
So you mentioned something about trust in the finance industry. So as a startup, Nivesh.com was before. I recently visited your website and saw that some of the top clients you have are Shriram Capital, ICICI, HDFC Life. So how are you able to manage or convince them to?
No, those are not clients. These are
Like partners, right?
they are the partners where we are selling their products. We are distributing their products to our customers.
Like how are you able to convince them to be on board for your services?
You have to show them the market. Right? Anybody is interested in growing their business. So you have to go and tell them that, there's a lot of untapped market in India where we are going, nobody else has gone there so far. So we can get you those kind of customers. And if you can get them customers, if you can get them business, they'll come with you. So initially it was difficult. When we started, it was very hard to convince them to start partnering with us. But today is not that difficult because there is already a customer base. We already have a track record. So today is much easier. But yeah, initially it was hard. But we have to tell them, see, the data mindset is important. So you have to go with data. You have to show them that this is the kind of opportunity we are talking about. And then people get convinced.
So as we know that the finance and marketing, they are far different from each other, both the streams are different, but is it got to do the marketing and finance side by side?
Again depends on what you want to do, what is your interest, right? There's no straight answer to this question.
Sir, like you said, that we need to see the future about after 5 to 10 years. So is it what to do after that 5 to 10 years?
See, it's very important to understand both. That's what I would say, right? Very important to understand finance and very important to understand marketing, because both are required in making sure what you are doing is done well. Because marketing is again a skill that you need to market yourself individually. Right? You have to create a brand of yourself. Even if you are looking for a corporate career, you have to create a positive perception about yourself. Today there are a lot of social media channels. You can create a positive view of yourself. You understand that how you can market yourself, right? So what I'm saying is that marketing is relevant at any level. For you personally, for your company, or if you start something. So you have to understand marketing, and at the same time finance is important. So that's why there is a concept of major and minor in MBA programs. That major is something that you want to do as a core focus, and minor is something that you want to develop on the side. Right? So I would definitely say that you should have both finance and marketing, but focus can be on where you want to build career and what is that you want to do on the side.
So I want to ask that one should go for full marketing, like marketing and digital marketing, or marketing or finance?
See, if your major is marketing, right, then within marketing you can decide what you want to do. I'm sure that's how the program runs. And finance can be, you can take 1 or 2 subjects so that you understand finance also. You should not be completely blank in terms of what the finance is. Right? And why it's important is that even if you are working for a company, at junior level it may not matter, but as you start becoming senior, you will be expected to look into other aspects as well. And company, let's say you become a CEO 20 years down the road, you'll have to manage finances of the company. So then you can't be completely blank that I don't understand what it is. And vice versa. If you are a finance person but you don't understand what marketing is, then it's a problem. So you'll have to see how you can achieve the balance, depending on what you want to do. But I would say that it's important to understand all these aspects of business.
So people who are afraid of finance but want to invest in stuff like mutual fund or SIP for that matter, is there a percentage specific that you suggest that they can invest of their salary monthly salary?
So there are some thumb rules in this. One is that what you are saving, right? What is the money at your disposal? And then there is something called asset allocation. So there is a thumb rule for asset allocation also. Asset allocation means how much you need to put in what kind of asset class. So there are two broad, debt and equity. And thumb rule is that it's inverse of your age. So if you are 20 years, 80% can go into equity, 20% into debt. So that's a very broad thumb rule. So if you are saving 10,000 rupees a month, 80% of that you can put into equity mutual fund, 20% into debt mutual fund. So why 20% in debt? Because that can help you meet any emergency, right? If you want to withdraw any money for any need, you can, use the debt fund. But equity fund can continue to build. That's where the power of compounding will happen. Because if you withdraw money from equity, then compounding will not happen. But these are very broad rules. It's not, again, how much you need to invest depends on your personal situation. What is your finance growth, all of that.
So generally as a professional we are trained in particular 2 or 3 skill sets. But when we go and start a startup, then we need to manage all kind of business domains. So how to do it and how to get exposure of all that so that we run a startup successfully.
There's a lot of resources available these days. But you need to put in time and hard work. There are a lot of sources online where you can learn about a lot of things. There could be a lot of offline programs also. And see, if you're interested, you go and talk to people. Let's say you want to do some project with a startup during your curriculum, it will be possible. Okay. So if you take if you decide what you want to do and then take steps to do it, you will be able to get there. Today, you would be surprised. I don't know how many of you explored. Most of the international universities, even like MITs and Harvard, they made their course curriculum free available online. So this is a great thing because you can read about anything, what they are teaching at those kind of institutions are free online. So that's where you can go and access these literature and since you are mature enough, you'll be able to understand most of it.
Any other question?
What do you expect from a fresher to be a portfolio manager in a future department?
You should understand what the portfolio management is, right? And for that, you need to study the relevant courses and take required certification.
Except for skills, what do you
See, portfolio management is nothing else but applying certain principles of portfolio management, which you read in your or study in your portfolio management courses, right? So there are set process that you need to follow when you are managing others' money. It can't be that I like this stock, so I'll go and buy, and if it does not work, the portfolio flops, right? So there is a set process which you need to follow as a portfolio manager, which is there in the textbook. So asset allocation, understanding what kind of theme is there for the particular portfolio, and then investing as per the defined theme in a very disciplined manner. So only those portfolio managers are consistently successful, right? So consistency is very important in portfolio management. So all the hypes that you see is like, today I do well, but tomorrow I may not do well because I'm not following a discipline, I'm going to managers. So those fund managers never do well consistently over a very long period of time. And to be able to do well over a long period of time, you have to understand the theories of portfolio management and see how you can apply them in your day-to-day life. All of them can be applied. You just need to learn and understand how they can be applied in your day-to-day life. And of course, you can do your personal investment, which will help you a great deal to understand how markets behave. Right? But theory is very relevant, believe me. See, a lot of times when you are in MBA programs, you think this is all theory, right? Practical life is very different. Yes, practical life is very different, but the base is this theory that is taught here. So unless your concepts are clear, unless you understand what is there in the textbook, you will not be able to apply well. You will be struggling in the real life situation because you not understood your concept here. So the textbooks or the theories which are there, they are very very relevant and important. What can get applied you don't know, but किसकी कब जरूरत पड़ जाएगी वो भी नहीं मालूम. And many times again I ask some basic ratios and people flunk right in the interviews. So that's very bad on the part of the person because that means you've not taken your textbook seriously. And one of the things most companies believe while hiring is that if somebody is not taken your course program seriously, then what ensures that you will work seriously in your job, right? So these are the indicators. That, what you do you do it seriously? Do you understand the importance of it? If you are not able to understand the importance of the program that you are attending, you may not even understand the what job you are doing and the seriousness that the job entails.
Sir, I have a question. This is for the senior citizens. Actually, what would you suggest for them? Why? Because post-COVID, most of them, they are very apprehensive to invest in any other portfolio rather than fixed deposits.
So a lot of senior citizens come to us and their requirement is really regular income, right, that they are looking at, and they are apprehensive of investing anywhere else apart from fixed income. But what we suggest them is a mixed portfolio where there is a small percentage of equity as well, because equity will help them grow their wealth over next 3 or 5 years, which is also important. And then a large portion of high yielding bonds, but safe bonds. So the regular income is ensured through the bonds and CDs, and equity helps in growing the wealth. So the wealth, they don't have to dip into their wealth, because if they put the money only in bank deposits, they will not give them the kind of regular income that they are looking at. And so the portfolio has to be designed appropriately. But if 60-70% is invested in bonds, that will give them the regular return that they are looking at. And the rest of the money can go into equity. Again, equity, there are a lot of type of funds available. So there are some balanced advantage kind of category where the fund manager itself changes the allocation based on the market condition. So those are safer than pure equity funds. So that's how one has to look at the portfolio and decide.
So, as we know, India is one of the largest investor in crypto or digital currency. And if we look from the point of view of the government, they are levying heavy taxes. On such investments. So what you have to say, like nothing is clear. Is government is ready or not? We are not clear as an investor.
See, that's the problem in the general mindset that cryptos, people invested without understanding what crypto is. And that tells you very typical of Indian mindset, which is a lot of herd mentality and speculative mindset. See, Indian mindset, if you really see, is too extreme. Either I keep my money in fixed deposit or I'll go and trade in stock markets. It's not in between. So either highly speculative or highly conservative. So the problem is, see, that's why Indian stock market is also so well developed. If you go to Western countries like Europe, you'll see the stock market is not developed at all because people don't believe in that kind of speculative investment. So crypto also the same problem, that people invested even from small towns, and a lot of investment has happened without really understanding what cryptos are. And why government has put taxes? Because they just wanted to kind of ensure that the unnecessary investment does not happen in cryptos. So government didn't want to ban it altogether, but they were kind of trying to dissuade people from putting their money in cryptos because it's not clear what will happen. So not many people understand, and it's not recommended for a normal investor to put money in something that they don't understand. And you should put money only where you understand what's going to happen and your conviction is there. Because if you put money in something that you don't understand, you'll end up likely losing that money.
Sir, again one question arises. If government is so sure about banning, then why the finance minister also speaks about the introduction of the new crypto, like Indian crypto, like RBI will issue some digital currency?
See, the problem with government is that they react very slow, right? ideally they should have created a crypto regulation right at the start when crypto started coming in. See, crypto itself is not bad. Ultimately, cryptos will happen, digital currencies will come in. So that's why government is talking about creating a framework for digital currencies or cryptos. The problem is the fad when it creates a fad and you don't know what you're doing. So there have been again scandals where people have lost money, like you would have read about those in the newspaper. But the problem is that government obviously moves slower. They're not able to keep pace. And that's not happening only in crypto. If you see, RBI has come out with regulations around BNPL and other things that fintechs were doing. And similarly, SEBI is coming out with some regulations to regulate fintechs. So the problem is that whatever fintechs were doing, most of them are not within the framework of the regulations. Because most of the fintechs are founded by tech founders who have tech background but they don't have finance background. So they don't understand the regulations so well. So a lot of fintech got created and then regulations trying to catch up slowly. So the heavy taxes was one way of taking a short-term step to say that okay, we should try to protect people from putting money into cryptos and then simultaneously bring out a regulatory framework so that you can manage it going forward.
Okay, thank you, sir.
Sir, is there any certification course for wealth management?
If you are interested in putting in hard work, CFA is a very good program, but it requires a lot of hard work. And then there are CFP programs locally available. CFP, Certified Financial Planner. But CFA is the ideal if you want to get into wealth management. So I hope you enjoyed the session.